Today, we're talking to New York City watch guy on the existential threat to the watch industry. Now, this conversation stems from an article written by him. It's linked below in the description. Do read it. It's very engaging. So this entire conversation is based on a few questions I had. So let's begin. What do you think is the real issue and why is it so right now?
The real issue to me is that there's too much money to be made in watches, right? Ultimately, before there was such a huge secondary market, there wasn't nearly as much demand for these things. There was always your core enthusiast group. There was always the handful of dealers that knew how to make a little bit of money by getting hot pieces. And you always had your high rollers that were trying to flex. Like those were sort of your three groups of buyers, right? And then there's the mass market, which is the random Wall Street guy who just got his first bonus, and he may or may not be a watch guy, but he wants to go get himself a Submariner or a Daytona or whatever he wants to get because that's their flex. So like those were your sort of groups, and everyone's had their place in the market, and everything was somewhat in harmony given demand and supply curves were roughly meeting each other. Frankly, you might even say that the supply outpaced the demand in many of these cases, because there were watches sitting in a store readily available for anyone to buy. I've gone into AP no less than 4 years ago, and there was a jumbo of every type just sitting in the window. If I wanted it, I could have bought it. Did I buy one? No. Why do I want a jumbo so badly now? Oh, it's because the jumbo is worth $100,000 on the secondary market. And now all of a sudden, if I can get one at 25, I want it. So that is the crux of the problem to me. All comes down to the fact that watches are worth a lot more money, at least the hot ones. And again, there's only so many of those, but the ones that are worth a lot more than retail price is what is driving people to want to own watches that they otherwise may not have cared to own. And as a result, all of these groups, right from the guy who knows nothing all the way up to the dealer that is trying to make a living off of this, no problem with that. Like they have a place in this market. Everybody in between as well is saying, okay, even if they're not buying the watch because they plan to sell it, it's an asset class. It is an appreciating asset that in your portfolio of stocks and bonds and mutual funds and ETFs and whatever it is that you have in your portfolio, this now becomes one more asset that you believe is only going to continue to go up over time. And so if somebody's offering you a fourth Nautilus this year at retail, whether or not you need that Nautilus, it's the equivalent of buying a piece of real estate now. You're just going to buy it because you say, great, it's going to go up in value. And so now the demand has completely outpaced the supply. I think that it's good, though, because what you don't want to have happen is the brands to just turn around and say, well, there's so much demand, we're going to now produce 5 times as many watches, because that's just exactly how a market crashes, and it doesn't help anyone. So the brands are, for the most part, doing the right thing from a supply standpoint in continuing to maintain the levels at which they're producing the hot pieces. But there's no way to really deal with the insane level of demand that is created when an asset is worth 4, 5, 10x what you pay for it the day that you buy it and you take it home. So that's, to me, the problem.
I think it's pretty crazy because now, I mean, up until now, most people don't consider watches to be any sort of actual investment. And even now, like I make a lot of videos mentioning the values of different pieces, and there's a certain type of person that always comments, watches are not investments, never invest in watches. And I still don't get why we're kind of divided on this a little bit. Is it just the old school thinking that's carried on? Or do you think it's partly true that it could crash anytime? Because my main question is, why are the secondary market values so high all of a sudden now?
Well, there's two answers to why we're divided on it, I think. One is the romanticism amongst the true collectors, whatever that even really means today, because in my opinion, there is no such thing as a true collector. There is a price at which every one of us will sell every single piece that we have. There is a price. That threshold may be extremely high for some of us and less so for other of us, but there is a price, I promise you. at which every piece can be sold. And so the fact of the matter is, those of us who somewhat consider ourselves to be true enthusiasts might say, hey, like these are pieces of art, there's work that goes into them, and to treat them as a commodity, and simply treat them as an investment that you buy and sell like you would a stock, it's a slap in the face of the artisan that created it. And I think it's easier to say that about independent watches than it is to say that about Rolexes and Pateks, because you think of those as being very sort of mass-produced brands in some way, even though they're Rolexes, but Patek certainly is not at 50,000. But you compare that to what Max does at MB&F, and he makes 200 watches. To me, everything he puts out is a piece of art, and so I understand why I personally would feel like you shouldn't think of them as an investment. The other side of it, the other reason why we say that, I think, is that, look, only 5% of watches are actually good investments. 10%? I don't know. I haven't done the math, but like if I look through the Patek catalog, other than the Nautilus line, the Aquanaut line, and maybe a few other pieces, is anything there a good investment? I would argue no. I'd say they're all trade for under retail in the secondary market. And so if you don't really know what you're doing, then if you just walked into a store as some guy who thought watches are a good investment and you went and bought a random Calatrava, that's probably not a good investment. And so I think there's the romanticized side of watches, which is I think that they're art, and I don't think that they should be treated as commodities. And then there's the, hey, you really need to know what you're doing if you're actually going to treat these as investments. In terms of why the secondary market is so high, like to me, it's this very reason. It's the supply and demand curves are completely out of whack. There's plenty of guys who are being able to buy these watches and see the opportunity to sell them, but they don't necessarily have to sell them for less than a certain number, because you're not dealing with college kids who are flipping sneakers here where, hey, if they just spent $500 on their credit card, they need to flip those pair of Nikes for $650 by the end of the month because they need to pay their credit card off. That's not who's playing the watch game, right? The watch game is being played generally by people who have a decent amount of money in the bank, and it's being played by dealers that are backed by millions of dollars in either investment capital or just loans that they've taken out. And so for them, if they've bought a watch for X number of dollars, they're not going to have to liquidate that watch for some portion of time. Obviously, if over 2 years they can't sell a piece and it starts to slip in price, they're going to have to liquidate at some point. But for the most part, all of these dealers who buy from each other, they just keep raising the prices amongst themselves. And at some point, they have to find an end user who's going to pay that price. But until that day comes, they're going to keep holding. And when you think about the collector, if I bought, and I give this example in one of my blog posts, if I bought a Patek today, a 5711 for $100,000, which is roughly what it's going for, and this is a $25,000 retail watch, if I paid $100,000 for it, it means that I really want a 5711 because that's an insane amount of money to pay for a time-only steel watch. If the market dropped to 80, what am I going to do? I'm just going to keep holding the watch. I'm like, look, I bought it because it has value. It has utility to me, which is really the only utility for watches is they provide us joy, right? There's no reason to own a watch for any other reason because I have an iPhone to tell time. And so if the only utility for me is the joy that it gives me, then even when that watch is worth 80 or 70 or 60 or 50, it's still presumably giving me $100,000 worth of utility. So I will not sell it. And so if I'm not willing to now sell it for 50, 60, 70, which is what technically market price is, then I'm not continuing to lower the market. I'm only continuing to hoard an item that is not even worth 50,000, but I paid 100 for it. And so for me, the clearing price is over that. And so like there's all these really interesting economic theories at play here with the different stakeholders who are buying and selling these watches. But I think that the basic premise of it is, I think the people who are playing this game have plenty of liquidity. Watches are continuing to become rarer and rarer in terms of the good stuff. The demand for it is only going up. It used to be the dealers and the enthusiasts now the average person is hearing about these and thinks that there's money to be made or that they're a good buy. And so there's just more people entering the hobby with the intention of being able to get hot pieces, of course. And my thing is, if you can never get a hot piece, what does that eventually do to the market? Does it just end up people lose interest and they go somewhere else? Or are they going to keep playing the game? And that's the question that I don't have an answer to, but it was me hypothesizing that perhaps it will drive a lot of people away from the hobby because they just get frustrated with the game.
Yeah, I think that's very important to highlight because there's a lot of people who really want their first Rolex, and that's the kind of the watch you can't get right now. So does that mean that these people are just gonna not get into watches at all, or are they actually gonna go into something else like Omega? Because most people that typically really want to shoot for their first Rolex, it's because they've gotten a decently paying job, and now this is one of the things that people just do. It's kind of a standard symbol of, I don't know, maybe it's status, or maybe it's just, okay, I need to get into watches because my dad was into watches and this is what you do in terms of culturally speaking. So are those people going to just shy away from watches? Are they going to keep trying to get some Rolex just for the sake of it, or do you think they're actually going to go into more something more in the realm of the horological aspect of watches and not just the status?
It's hard to say. I don't think I have an answer for this question. My blog post hypothesized that people would leave the hobby because they would just find some other muse. There's enough things out there for us to blow our money on. There's all these new collectible classes coming. There's NFTs coming. NFTs are a lot easier to buy than any watch on the market today. So, like, yeah, I think that if the belief in general is that humans have this innate need to collect things, and the reason we collect things is presumably because it gives us a sense of community that makes us part of a club. If that is the theory, then one would assume that if you are unable to join the club because you can't purchase the item that lets you join the club, then you will simply find another club to join. One in which your whatever money you do have is welcome, and it gives you the same whatever void that it needs to fill is filled in your life. So that's my belief, is that ultimately, if you just drive away too many people and you frustrate them, then they're going to go join a club that's a little bit more welcoming than the watch collecting one.
That makes sense. And right now, do you think like lower spend history customers, do you think they should just try to work on their spend history, or do you think they should just look at other brands?
I think there's a ton of great brands out there that don't need you to spend a ton of money to get their stuff. The problem is most of them have a pretty high barrier to entry in terms of where their entry level piece comes in, right? So let's look at MB&F, for example. To me, my favorite brand of all time. Max, great guy. He makes, to me, the coolest watches in the world. The entry level for an MB&F is probably the LM101 that they just came out with in steel, which I think is $50,000. That's hard. Like $50,000 is not entry level to anybody, right? So how do you get into that brand? You can find some pieces on the secondary market. At one point, they were probably as low as 30 grand, but all of the indies have also started to now clean up the secondary market. Many of them bought their own supply back, and they're keeping their prices high, which is good for collectors to know that they're not going to lose money on the secondary market. But it now makes it incredibly hard for a new collector to break into that market because you have to have at least 50 grand. The allure of Rolex has always been that you can get a Rolex that you really want for what, 8 grand, 10 grand, right? And like, it's still the status symbol. It's still a well-crafted watch. Like, everything about Rolex is value for money. You're getting something for 10 grand that is as good as anything from a build and a quality standpoint. Obviously, not necessarily from hey, this is really cool and this is rare standpoint, but at least if you're getting your first watch, a Rolex is a good place to start. So now you have to start to go away from Rolex. You have to go away. I mean, even Patek, right? The fact that you could get a Nautilus for $22,000 or whatever it was when the 5711 first came out, maybe even it was less than that, and you could get a discount. Like, that was sort of an approachable price point for the new collector, new enthusiast to get into. where are you going to go now to find something that you really like in that sub $10,000 range? And so, I had a friend who wanted to buy his first nice watch, and I got him into Lane, which is like this really small independent guy. He makes all bespoke watches. You get to pick your dial, your finishing on the movement, and for $6,500, my buddy was able to get a watch that looked and felt exactly the way he wanted to. He really liked it. There's no status symbol there, right? If you're the kind of guy who's buying the watch for a status symbol, you're gonna have a problem now. But if you're willing to just buy a watch because you wanted something that looks nice on your wrist, yeah, there's plenty of places to go. Go to Nomos, go to Tudor, go to Lane, go to Kudoka. There's like so many of these small indies, and then sort of sister brands that are popping up, that I think there are places for guys to get into the game without having to break the bank. But if you want the brand status symbol of saying, hey, I'm buying something that everyone is going to know is special, that's where it's going to be a problem now, because I don't know where you go for less than, $30,000-$40,000 today to get that.
Yeah, that makes sense. But the other thing I wanted to get into is what kind of tactics brands employ and use to keep people wanting their watches and keep them from getting it at the same time, because once you meet the demand, then you kind of get people to lose interest in your brand over time, right?
Yeah, and look, I think creating hype and creating demand is important for brands. Look at Vacheron, for example. I mean, I even told this directly to their guys. I'm a huge fan of the brand, but honestly, until the Corey Richards prototype came out 2 years ago in 2019, there was nothing from the brand in the boutique that I ever felt I had to own. They have very nice watches, great finishing, like storied brand, the part of the Holy Trinity, all of that, great. Like, I'm taking nothing away from them. But they didn't have anything that like really gnawed at my soul that I was like, I have to own this watch. And then the Corey Richards comes out, and all of a sudden I'm like, holy shit, this is the watch I really want from Vacheron. I love it. Obviously, I try to bid on it. I don't end up winning. And then they
This
come out
this was
with,
in 2019, right?
this
So
was
2 years ago.
2019,
So it's
2 years
been a
ago.
while in the making then.
Correct. And right after I think they saw all the hype in the market created by that watch, I'm sure they had an internal meeting and they said, we better take advantage of this moment in time where there's 100 people, 1,000 people screaming about this watch. Let's see what we can do with it. Now, I don't know what goes into the decision making on their side, which is, okay, we want to make this watch. Fine. How many do you make? Right? That's the golden question now, because I'm sure they did some market research. I'm sure, like, I personally must have screamed 50 times on Instagram, please, Vacheron, make this watch. And I'm sure many, many other people did the same. So the question now becomes, okay, you've caught lightning in a bottle. You've got this particular watch with this color scheme and this dial, this grainy dial. It's captured everyone's imagination. It's a it's a steel sport watch, but let's call it a titanium sport watch. I don't think it makes that big of a difference when you're a Vacheron, whether it's titanium or steel. I'm sure they can make as many titanium cases as they want as well. They had a decision to make, which was, how many of these do we want to make, and how easily do we want to make them available to people? And they came up with the number of 150. I don't know. Like, was 150 the right number? Could they have made 500 and sold them out? I personally believe absolutely yes, just based on the number of people who have DM'd me in the last 3 days since I got mine. Could they have sold 1,000 of them? Probably. Could they have sold 5,000 of them? I don't know. At 5,000, a brand that historically is not making that, like, if they're going to make a quarter of their production, the Corey Richards watch, I think they'd be in trouble. I think they'd oversaturate the market. So they had this decision to make, and they went with 150, which to me was the absolute lowest number that they could have gone with in this situation, right? I think if they had gone with like 50 or 100 at $30,000, like, I don't even know if the R&D costs make it worth their while ultimately to produce this watch with all the milling and all the parts they have to produce. So to me, 150 pieces, I think they just, like, I don't even know if they really made any money that will move the needle for them on this piece. But what I think they did is they used it to create an unbelievable amount of hype in the market around the overseas model, which now they had already gotten there with the blue dial, the fact that it's boutique only and it's becoming harder and harder to get one. But now you add on this Corey Richards layer, and I think that Vacheron is using this moment in time where they made a little bit of money on this, but not a lot of money. But now the brand has arrived in many ways. It's re-arrived because Vacheron's been around for over 100 years. But I think this is the watch that puts them on the map. And I liken it in some ways to the Chapek split-second chronograph that came out at Geneva Watch Days a few weeks ago. To me, I've been looking at Chapek for 3-4 years since they kind of rebooted the brand. Great watches, tremendous value for money. They do an unbelievable job of everything. There was not one watch that was eating at my soul that said, I have to own it. And then the split second Antarctique comes out, and I was like, that's the watch. I have to own it. And I bought it instantly on the spot. So I think every brand needs that one watch that just gets the whole community amped up about them. And the halo effect of that one watch now sort of goes across the entire breadth of watches that they make. And it elevates the entire brand. It elevates all of the watches. So for me, I think the Corey Richards is the example of Vacheron doing something where they could have produced an extra 500 watches. They chose not to. They made the least number of watches possible. They really got everyone amped up. Everybody wants a Vacheron overseas now. And so they made it impossible, nearly impossible to get. I won't say impossible because I'm a testament to the fact that it was possible to get one without, being a high rolling spender of millions of dollars with them. But they made it so hard to get, but they are expecting that will have a halo effect across the rest of their brand. And I think that it will.
That's really unique with the Vacheron because you typically expect them to only go for the extremely high rollers because it's 150. 150 watches is not even enough to, like you said, change anything for their profits or their bottom line. I think it's simply just to revive the brand, like you mentioned, and create buzz and create real enthusiasm around the entire brand. What I think is fascinating is now brands are exchanging sort of hype and watch community interest for bottom line. I mean, you see that with almost all the brands. They're creating these limited edition watches and they're making everything so much more exclusive. And I'm pretty sure that they would sell a lot more volume if they didn't do that. But I mean, they wouldn't have a massive spike in interest or long-term prospects like they do now by creating this interest. But how come they're willing to sacrifice their bottom line right now for more interest in the brand? I find that really surprising.
Yeah, I mean, for a brand coming from a conglomerate like Richemont, Swatch Group, LVMH to be doing that, I think it speaks to the fact that they're being very well run by people who are playing the long game and not the game that almost every public company falls into, which is you got to worry about next quarter's earnings and nothing else because you want your stock price to keep going up, right? I think the Swiss are always the most stubborn. They take the longest to realize what other verticals have realized already. Take, for example, Nike. Nike could produce everything they produce is mass market, right? So they could literally produce 10 times the number of Jordans that they release every Saturday morning in their app if they wanted to. They could also increase the price by 2x if they wanted to, and they would still sell those sneakers at $250 instead of $125. But they choose not to because they're smart enough to know that it's better for a brand to sell out instantly and for the secondary market to take over and for the true value of their item to be seen on the secondary market than for them to be overproducing and price gouging. You look at what happened in the trading card industry in the 80s and 90s and 2000s when essentially these trading card companies started to overproduce trading cards. In the 70s, 80s, trading cards were hot. They became a true asset class. In the 90s and 2000s, these guys started producing millions of every card saying, who cares? Let's just sell them. And what happened? The entire trading card industry went to a big fat zero. And it only got revived during the pandemic when people were at home and they were bored. But it was also because the trading card companies today realized that less is more. And so they focused on making one of one cards. They focused on making five-piece limited editions, 25-piece limited editions, and they made them extremely scarce and harder to get. And that revived the interest in the entire industry, because now you're buying a pack of trading cards hoping that you get one of those one of ones or one of those one of fives. So the watch industry is always a little bit late in realizing these things, but I commend the Vacheron team on making the hard choice to only make 150 of these and playing the long game and not playing the short game of let's see how much money we can make before next quarter, because they absolutely could have done that and they didn't do it. And I think that in the long run, this is going to help their brand and their business, and they'll make far more money down the road because of it.
Yeah, I think it's quite unique because it's not just Vacheron, I think, that's doing this. I think a lot of the Swiss brands have suddenly switched gears and they're all trying to do this because they've seen success with some few brands, and maybe Vacheron is an example and someone that pushes the needle forward for other brands to use the same moves. And definitely Rolex and AP Patek so far have done this quite a bit, limiting who they give their pieces to, and that has only helped their elevate their brand status. But do you
Yep.
think there are some brands that are kind of sneakily feeding the secondary market just to kind of know where their product is at or help raise the secondary market a bit? Because as soon as something releases, there's at least four or five pieces that usually end up on the secondary market when it's AP, Patek, Rolex, any of these brands, not when it's something very independent like MBNF. That's very rare because they're not that huge, and Max would know exactly who his watch is going to. So do you think some of these brands have a team that kind of calculate this and do kind of push out some kind of backdoor deal and get some pieces on the market just to see where it's at?
Without a doubt, I know it for a fact that it happens. So yes, the answer is a resounding yes. It helps every one of these hype watch brands to have their item on the secondary market listed at 2x, 3x, 4x the day the watch comes out, because it now means that there is a mad rush from their customers to try and buy that new watch, because they know that there's 3x, 4x in potential gains lying there, even if they're not planning to sell the watch. As I said, these are asset classes. You don't buy them just because you want to sell them the next day. You buy them because one day they're still hypothetically worth 5x. And if you ever needed to liquidate that asset, you have it with you. So 100% the brands are doing it. Now, look, I think some brands have been better than others at really policing that secondary market and making sure their items don't get out there. So Vacheron, for example, I come back to them. I am someone who's waiting for my white gold skeleton perpetual to come in. In the last 2 years since they released the rose gold version and now the white gold version, I have personally come across 0 pieces on the secondary market. And I say that, and I ask dealers that I know, none of them have seen one offered for sale either, which to me, arguably the best open work skeleton on the market today, not having seen the secondary market is just bananas. So they've clearly done a very, very good job of policing it. And I guess Vacheron feels comfortable in the fact that they don't need that validation on the secondary market for their pieces. They know that there's a market for how many ever few pieces that they're making, because I think they're really limiting the supply of these items. You look at AP, on the other hand, there's at least 4 or 5 black ceramic open work perps on the secondary market, and they're listed for $400,000 or $500,000, which obviously makes that the hottest watch in the world, and everybody wants one at retail now. Richard Mille, same thing. You see every one of their pieces is on the secondary market immediately. So, who's feeding the market? I don't know. But my guess is that even if it's not coming directly from the brand, there's a sales guy somewhere, there's an AD somewhere who has a deal with secondary market dealers, and they're going to get whatever it is that they want on day one. And whether they're doing it because they're getting money out of it, or whether they're doing it because they want their brand value on the secondary market to be sky high and to show that on day one, who knows? It's probably a mix of both of those things happening. But look, it's good business. Like, I can't fault any of these brands for wanting to do that. If there was a very simple way for you as a business owner to make sure that every single watch in your store had incredible demand and all you had to do was give one to one guy who was going to go post it on the secondary market, that seems like pretty good business to me.
Yeah, that's what I was wondering because you see a lot of the brands get hyped up because of the secondary market. So you just wonder whether why would the brand not like this? Because they seem to hate everybody that puts their watch on the secondary market. But is that kind of a facade and they want maybe 5-10% to slip through so that it
100%.
does this? Yeah, because
100%
I
that
think
is exactly
no
what
one
it is.
ever no one really ever talks about that. I think they either no brands hate to put watches on the secondary market or no brands love to do that because I feel like there's a benefit with doing a little bit of both for every one of these brands.
Yeah, and to me, those things are not mutually exclusive. Like, as a brand, you can absolutely hate flippers. There's nothing wrong with that. And at the very same time, you want your brand to do well and you want to seed the secondary market. Like, those two things can happen at the same time. It does seem hypocritical, no doubt about it. And it does seem like they're talking out of both sides of their mouth a little bit sometimes. But it's business. Like, we keep forgetting this is a business. And most of these brands are owned by public companies that have shareholders and that have quarterly earnings to hit. And so, yeah, like, it is what it is. And then the absolute other end of the spectrum are these independent watchmakers like MB&F and Gronfeld and Urwerk, where you talk to these guys and business is not even on their mind. Like, they literally just want to make cool shit and they want to make enough money that they can survive, live a decent life, and keep reinvesting in the business year after year to keep making cool stuff. And so, and I'm a buyer of both sides of this. Like, I love AP. It's my if you literally put a gun to my head and said you can only own one watch for the rest of your life, it would be an AP, which is insane coming from a guy who's a hardcore independent guy. That's how strong the AP brand and product is. I love what they do. And so I'm buying Patek, I'm buying AP, I'm buying Vacheron, and on the other end, I'm buying MB&F, I'm buying Urwerk, I'm buying Gronfeld. Like, I actually play across the entire spectrum, and there's like this insane divide in sort of the mentality of how these brands do business and how these brands do business, because some of them are true artisans who are just trying to make cool shit, and some of them are businesses, and we have to remember that they're businesses.
That's true. And the other thing I wanted to go over in terms of the brand tactics is do you think this growing frustration within the watch community with brands not giving people watches, do you think that's going to eventually harm the brands? Do you think they're going to have to, at some point, change up their MO?
To me, there's always a breaking point in everything in life, right? Whether it's a relationship you have with someone, whether it's your own internal battles that you're fighting every day, or whether it's buying something as stupid as watches. Like, there comes a breaking point when you just you fall off the wagon and you go, I'm out. So today, I think it's early days for the watch brands. I think the mass market has not even gotten wind of the fact that there's brands like Vacheron out there that are doing really cool stuff. No, nobody knows what MB&F is. Nobody knows what Gronfeld is. No one knows what Urban is. It's like there's literally like, I don't know, 1,000 people that have bought an MB&F in the history of the brand, probably, right? Like, it's nothing. So I feel like we're still so early in the watch game. There's still no good e-commerce plays. There are no really good secondary market peer-to-peers. Like, Chrono's been around, but like, let's be honest, everyone hates Chrono. So we still have so much growth left with building better tools, building better marketplaces, creating better content. Like, all of this still has to come. And there will still be millions of people that will get into the hobby, or at least try to get into the hobby. And then you have a point at which there could be a breaking point where people are like, okay, this has now gotten completely out of control. Today, all that I think is happening is that we're looking at $120,000 watch selling for 250 or 400,000, and we're going, I can't comprehend how someone would pay that money. But you got to remember, everything's relative. When the when the retail price is 120, if it's selling for 250, it's only selling for two times retail. When you look at a pair of sneakers like like say the Air Jordan Dior's, right? Those things sell for $25,000 on StockX. The retail price on that was $200. So it's selling for 10x retail, but it's selling for way more than it's selling for 20, 30, 40x some of these sneakers. And so when you look at that relative to the watch market, there is no watch really that sells for 10x retail today. It doesn't even exist. So we haven't even gotten to that point. Now, when you look at the absolute dollar figure, that's where you go into shell shock, because when a pair of $200 sneakers is selling for 2,000 or even 20,000, you're going, whatever, it's still only $2,000. It's not that crazy. Whereas when you look at a watch and you're thinking in $250,000, your head starts to explode. But at the end of the day, everything is relative. The guy who's playing the sneaker game versus the guy who's playing the watch game are in two completely different stratospheres in terms of the money that they have. So for the guy playing the watch game, getting two times retail, not that big of a deal. He's still waiting for the day that he can get 4x, 5x, 10x, 20x retail. And I think that day has not yet come. So from where I sit, I think that we have a ways to go before you've pissed off everybody and that things just completely fall off. To me, we're a long ways from there. And so unfortunately for everyone who's listening, this is going to continue for a while. You're going to be frustrated.
Okay, that's quite a good answer, because I just figured that there'd be a point, maybe 2, 3, 5 years from now, where people, let's use Rolex as an example, where people just decide, you know what, Omega is the new Rolex because they're giving us watches. I feel like the Rolex customer might get frustrated a lot quicker before the AP, Vacheron, or Patek customer, because Rolex produces 1 million watches per year, and everyone kind of knows that, and you're not getting anything special, but you're still treated like dirt. So do you just go to Omega?
Right. I mean, and to me, that is the brilliance of Rolex, right? Through all these years, despite making as many watches as they make, despite the fact that we all know there's nothing special about them, they have managed to maintain that brand equity of being the ultimate in luxury. Like, it's crazy, but it's the only brand that people know, and it's genius. It's a Harvard Business School case study in luxury brands, because there's no other brand on earth in any vertical of luxury, whether handbags, sneakers, what have you, that I think produces that many pieces of anything and are still an incredibly rare item to find in a retail store. It's impossible to get one. Everybody still wants one. And the brand does not seem to have been diminished even by 1%. Like, Rolex is still Rolex. It's brilliant. What I don't even know what strategy they've employed, but like, they should be teaching a class on this.
I feel like they have a bunch of people in different continents just with massive safes filled with these
Yeah.
pieces, and they just let them out every now and then. But otherwise, I don't see how so many watches are not going anywhere. I wonder where they're sitting. So now I wanted to move on to possible solutions. And before we get into your solutions, I just thought about what would happen if the stock market or the real estate market completely crashes. So something like the recession back in 2008, 2009, something like that. Would that really affect the watch market right now?
I don't think so, right? I think a lot of people are looking at watches and some of these alternative asset classes as things that are perhaps not as tied to the economy and to the stock market as one would have historically thought. I think the pandemic was a perfect example of that. Initially the stock market crashed a little bit, and everyone's like, "Oh my God, everyone sell your watches. We're all going to be screwed in a few months' time." And of course, the stock market did rebound. But I think if you ask anyone if people were buying less watches during the month or 2 months when things were looking really bad, I don't think any dealer will tell you that that's true. I think he'll say that people were buying more watches than usual. And so I think this historical belief that the purchase of luxury goods is tied to the health of the overall economy, I don't think that that's true at all. And I think that a big part of it is that the wealthy continue to remain wealthy, and the wealthy oftentimes become more wealthy when the rest of us are not getting wealthier. And so if ultimately the belief once again is that most of these watches are being bought by people that have plenty of money in the bank, then I don't think that you're going to see a stock market crash or a real estate market crash affect the watch market. Now, you may see it affecting the lower end, in the sub $10,000 range of watches might get hit, but I don't think your AP, your Patek, your Richard Mille, any of those guys are going to be affected in the least.
That completely makes sense because when you're playing in those leagues, you're kind of protected on all fronts, and you're not you don't you're not spending a large percentage of your money. So it's still a very small percentage, even though it might be a really expensive piece. It wouldn't really matter on the surface, and you have no reason to sell it or liquidate it. So it will just, I guess it would probably just hold.
Yep.
So then, what if brands really start spying on customers and kind of policing customers? Would you think any brand would really want to go into that direction?
They're already doing it. I know for a fact that there are brands who send people to 47th Street and they pretend to be customers and they're taking down the serial number so they know what's on the secondary market. There's brands who have now created registration systems for your watches. So you buy a watch, if you register the piece online, they'll give you whatever, they'll give you extended warranty, or they say, hey, it helps your profile that we know what you own. Like they're, again, all smart things to do. I'm not calling them big brother by any means. I'm saying these are all smart things for the brands to do, because one, it helps them with their own CRM internally and understanding who owns what, where are their pieces. All of that is good. But the unintended consequence for customers is that when you sell that watch, it is becoming easier and easier and easier for the brand to know that you've done that. How they treat you for having sold a watch is where I have a problem. So this is what I talked about in my second blog post a few days ago, which was
Rules of
the
engagement.
rules. Like, tell me what the rules are. I don't have unlimited money. Neither do 98% of the watch community. There's 2% of guys that have more money than God that never have to sell anything. God bless them. I hope one day I'm in that position. I am not in that position. I cannot forever just keep buying watches and never have to sell anything. And so if that's true, and you consider me to be a good customer who in general buys watches in good faith because I love them and I want to wear them and I want to share them with the community, then if I sold a watch after 3 years, 4 years, 5 years, whatever the number is, and you then find out that I did that immediately and you cut me off, to me that's bullshit. If I sold it the day after I got it, a month after I got it, no problem. I understand. I understand that there was somebody else that was probably in line for that watch and I took something from that person and now I've made money on it. And I understand why you as the brand might be pissed off at that. I don't actually think you're pissed off at it, but I understand why you're going to pretend you're pissed off at it, and then you're gonna ding me for it. But otherwise, I don't think that they have a right to say anything to you a couple of years out. Like, I think that they should be glad that a few years out you're able to sell that watch and hopefully put that money towards buying more things with them. Like, that's how the economy moves, is like you buy, you sell, and you buy some more, and hopefully you buy even more from the brand. So to me, it's a little silly when I hear that brands are getting pissed off with customers for selling something many years later. And so to me, it's just like, you need to give me some rules. Like, give me some guidance. What is kosher? What is not? Let's have a conversation about it. And I understand this is never going to happen. Like, this is me throwing out ideas for a watch utopia that will never actually happen, because we all know these are just crazy ideas I'm throwing out. But
No, actually, I think it could happen because with the car, the new Ford GT. So what they did was they had a contract where if they let you have one, it was limited to initially 500, and then they decided to make another 500, which people were pissed off about. But the contract was that you can't sell the car for 2 years if they let you buy one. And there's a famous case of John Cena who got the car and sold it within that 2 year period, and Ford sued him. But I think
Oh
there
wow, so
was
they're
some
making you
kind.
sign an actual legal contract that says you won't sell it.
Yeah, and Ford actually went after John Cena for selling it within that 2 year period, and that made a lot of news. But could
Wow.
watch companies do that same thing, or is it difficult to apply this legally?
Well, here's the thing that I've learned about the law, which is that technically you can put goddamn near anything into a legal contract, like anything. You could ask for naming rights to my firstborn son, and if I put that and signed it in a contract, the brand would have it. So, the fact of the matter is, no, I actually don't think that this would be difficult to implement into the watch world. Um, I would argue that the watch brands might actually be very worried about what would happen to their business if they were to go after this method of policing, because as I've said many times, the minute you can't sell a watch at all, and now you're signing a legal contract that could have financial and legal ramifications to you, I think there would be a lot less people buying watches than you would think. That would be the concern. Now, does it work for 500-piece limited editions? Yes, but if you're making everybody sign this across 20,000, 30,000, 40,000 pieces, I think business just drops dramatically for the brands, and it's too risky. They would never ever do it.
Okay, that's good to hear that because I wanted to know how it would actually apply in this situation. Now let's get on to your solution, which is microfinance, which could be uh, possible actually. You should probably introduce the concept and how it would work.
Yeah, so microfinance, is something that's happened for decades in developing nations. These are countries like India, places in South America, Africa, where listen, these people live in abject poverty. Like guys like you and me, we would not survive a day in those conditions, right? These are people who are surviving on under $1 a day to live like their entire life. I'm talking home, food, entertain, like everything. You're talking under $1 a day is what these people live on. It's insane. And so when you live in such poverty, it's very hard to own assets. You can't own land. You can't own your own home. You can't own a business. You can't even own a cow, which could potentially provide you with milk that you could then sell that milk and make money. And so there were this idea of microfinance was that lenders would come to places like this and they would offer you a small loan. And we're talking tiny amounts. Let's call it $100 in a loan, right? So they give you $100 and they offer these types of loans to everyone in the village. And everybody is essentially responsible for everyone else paying back their interest or whatever loan payments have to be made every month. So the guy will show up once a month, say on the first of the month. He comes, it's all, most of the time, this used to be done on pen and paper. Now I believe there's software and, iPads and stuff that can track all this stuff. But the guy shows up and he'll say, okay, where's your payment? And if a particular household in that month cannot make the payment, nobody else in the village can get a loan that month. And so it essentially creates this incredible societal pressure for everybody to make sure that they are not screwing over the lender, because if they do, then they've essentially screwed over all of their friends and family who live in the same village. Now, there are bad parts to microfinance, which is many people have committed suicide as a result of not being able to pay back a loan in a particular month and the pressure of the society being so high that they just decide to kill themselves. Hopefully that would never happen in the watch community, but there are some negatives that have occurred as a result of microfinance. But I think that in general, they have helped to uplift many communities that otherwise had no access to credit. And by being able to get money, they have been able to build businesses and build a self-sustaining lifestyle. So to apply that to the watch world, my idea was essentially a buddy system, which is in order, if you're not a known buyer to a brand and you are just getting into the hobby, or maybe you're in the hobby, but you're with other brands and they don't know you at a particular brand, you would need to show up with a existing customer who was willing to vouch for you. And essentially that person is putting their ass on the line and saying, hey, I trust this guy is not going to flip this piece. He's a good collector. I think he's going to spend money with you. Please take care of him. Of course, it's up to the brand whether, to what extent they want to take care of him. However, your profile and this person's profile are forever linked together now. And so if he ends up being a bad actor and he screws over the brand in some way, if I'm the guy who referred him and vouched for him, I'm in trouble now. And I honestly believe to God that this is the simplest of all solutions and one that would actually solve the problem on all parts, because I think that making the community police ourselves as opposed to letting the brands police us is where you will truly end up getting the guys who actually want these watches and love them and want to wear them as enthusiasts and will share them with the community. I think those are the guys who will end up getting the bulk of the product. That's not to say that the dealers won't get theirs. The dealers absolutely will get theirs. I think that the high rollers will absolutely get theirs. Those same groups that I broke down to start this conversation, they're still going to get theirs. But it's going to allow for there to be an actual mechanism by which new collectors who have no previous history with a brand will be able to find a way to get in, as long as they're legitimate buyers, and it will make sure that this hobby continues to thrive and that there's a next generation and a next generation, and that we don't risk the day that will come when people are just like, fuck it, there's no point. Like, I have no chance. I'm out. You don't want that day to come. I don't think the brands want it to come. I don't think I, as a watch collector or an enthusiast and a loud voice in the community, want it to happen. So there is a path to making this happen, and it's not one which requires policing and all of that stuff. It just requires you to convince somebody that you are friendly with, that you're not going to screw them over. And I think there's a far lower likelihood that a consumer would screw over a friend who has vouched for them than they would screw over a brand. And so that was the thesis of my whole idea.
I think it really makes sense for most people. But then there's that small percentage, maybe 10% of people, let's say they're Nouveau Riche, or they don't really have friends within. I mean, you have to be in a sort of income or wealth class in order to get into some high-end brands. So if you're talking about something like, again, AP, Patek, Vacheron, you really have to be making serious bank in order to get into that. And if you're newly rich, so you don't really have friends within that class, how would someone like that approach any of these brands?
I think if you are a true watch enthusiast, you end up flocking to the communities that exist on Instagram, Red Bar. Literally Red Bar is in, like, I don't know, 50, 70 countries now, something crazy, right? So, like, there is going back to this idea of why we collect as humans to begin with, right? It's to create this sense of community. So if you are actually a true enthusiast and a collector, I think you will automatically find that group of people because you're magnetically attracted to them. So you end up meeting them, you end up making friends with them, and invariably there will be someone within that group that has that AP, Patek, Rolex relationship. And if you're truly a passionate person about watches, I think that comes through, and I think someone would be willing to vouch for you. Which, by the way, there needs to be something that is offered to the guy who's making these introductions as well, right? Because if all I'm doing, let's just say, for example, that I was that guy who had all the relationships with all the brands, and you're coming to me and saying, hey, man, will you help me? How does it help me in any way to risk it, right? And bring you into the brand if if the upside is nothing, but the downside is that you end up screwing me over, you end up selling the watch, and I get dinged. So I think that you have to offer something to the guy who's acting as the conduit as well. I need to have some upside. And so that upside could be, hey, listen, for every person that you bring in that's a good actor that ends up spending money with us, we're actually going to pretend as though their spend is also your spend, right? And so now you're bringing in 10 guys who end up spending $5 million with us. You are a VVIP client for us, and we're going to take care of you. We're going to get you whatever you want because you've done us a service and you've done the community a service. So I think you have to offer something to the other guy as well, because otherwise, look, I may do it once or twice, but then the third time be like, man, the risk is getting pretty high now. I've referred 3 people to AP, and man, one of them sells their watch, I'm screwed. So I think you have to sort of balance that as well.
The other thing with that is like, so if there's one guy referring different people and it kind of does benefit him in terms of spend history or something like that, then what prevents him from getting a huge group of people that are all friends together and them, I mean, kind of getting a huge supply of pieces and a lot of pieces and it not being spread out?
Well, look, at the end of the day, that person would have to have a shitload of really rich friends who are now willing to buy a bunch of stuff that they don't want, and they have to sit on it. They can't sell any of it. I think that's harder than it sounds. Like, yeah, there might be one really rich guy who's willing to finance this and say to all of his friends, listen, you keep buying on my behalf. I'm just going to fund it all. My guess is there aren't too many guys out there like that. I think ultimately, I personally can tell you, I don't have 20 guys that have unlimited money that I could go to myself and just be like, listen, I'm going to refer you to AP. You guys keep buying watches all day long because it's going to help me, and you just sit on them. I can't do it, and I can't finance that myself. And so ultimately, yeah, look, people, the beauty of human ingenuity, I think, is that we always find a loophole for every problem, right? And that's how we've solved so many of the world's problems. Although apparently we ignore the real problems of this day, like homelessness and poverty and hunger and all of that. But like in terms of how to make money, we always find a way. So yes, there will be people that will slip through the cracks and will find loopholes. But like, again, it's about the lowest common denominator. Like, does this solve problems for 90% of people who are trying to get into the hobby? And if the answer is yes, then I think that it's a worthwhile endeavor for the brands to try.
I think it makes sense. I think it's pretty consistent, and I think it could work across the board. But just that some brands shouldn't implement this, like the brands that are not extremely hot and the brands that are not extremely high end. If
Yep.
they implemented something like this, you just piss a shit ton of people off, I think, and I think that would just not be beneficial for lower end brands. So do you think there's only some brands that should consider this and some other brands should just continue what they're doing?
Absolutely, right. I see no reason for this to become a thing. Like, there's plenty of brands out there that have plenty of product that they need the average guy who's just on vacation in Hong Kong or in Geneva or in New York, who just found a new girlfriend and he wants to impress her, and he walks into a store and he wants to put his credit card down and buy something. Like, that has to exist. Like, retail has to exist. Everything can't be pure allocation, which is, you walk into AP, you walk into RM, you walk into Patek today, there's nothing. Like, it looks like the store's been robbed. Even Rolex, it looks like the store has been robbed, right? And you can't have that with every brand in the world. It'll never work. No one will care to play this game for a Tudor, right? Or for a Nomos, or for like some of these starter brands. Like, their business needs to be volume. They thrive on that random person who walks in on a Saturday afternoon and on a whim decides to spend money. There is a market for that. But when it comes to the stuff that we all know is where the real money is at and where everybody is dying to get a piece, I think that's where those brands need to implement something. Otherwise, they're really turning off their customers.
Yeah, I guess that completely covers all the watch spectrum and how it would apply in different, well, levels of the watch spectrum. So that makes a lot more sense because I was just worried initially that maybe like all the lower end brands would think, oh, this is the move. This is how we shoot into the stratosphere. This is how we get more popular. I mean, we copy AP, we copy Rolex, maybe even Rolex, I don't know, but just the brands that make very few pieces, I guess. So yeah, I think that was a really fun discussion. I really liked your article, and I'm going to link it below in the description. So
Awesome.
everyone can go read it, and your second article as well, the rules of engagement that we briefly touched on. And Thanks very much
And
for the.
there will be more coming for sure. I'm enjoying the response from the community in general. Obviously, there's plenty of people that have negative things to say, but hey, that's part of it. I have no problem with people who have an alternative viewpoint on this. It's all about trying to create discussion. At the end of the day, I have no vested interest in this, right? Like I don't represent a brand. I am not making any money from the brand, sadly. No, but nobody is offering me an endorsement deal or a sponsorship deal as much as I would love one. And so it's all about just creating discussion and talking about it, because we're all enthusiasts and it's a fun thing to debate and see if anything actually ever happens from this stuff. And my guess is nothing will happen, and life will continue on exactly as it is today, and we'll all be trying to figure out how to get the next piece. But for nothing else, it makes for a fun Sunday afternoon discussion. So thanks for doing this, and thanks for having me.
Thanks for coming on here. It's very interesting to have someone in this world and actually buying all these pieces in the know-how in the center of it to speak about it, because most people who have such high-end pieces don't like mentioning it or talking about it anywhere, and you don't get to see them or hear about it. And I think you're inspiring a lot of other people to also take on this penmanship, because I saw that you posted something about King Flume, I think on that's
Yep.
his Instagram name. I don't know how it's pronounced, but he also
Yep.
wrote an article, and he's also like you in the space. So I think that's cool. It's cool to see true collectors say something about it for once. Usually we just have the dealers talking about this stuff and pushing product, but this is very cool to do.
Yeah, I thought a lot of I've always been a writer. I've always enjoyed writing. If nothing else, it's cathartic for me to write, and so I enjoy doing it. And I thought for a long time about creating content around watches and what I would do. And originally it was very much what everyone else is, which is, oh, should I just review watches because I get the watch? Like, should I sit there and I break it down? Should I talk about industry news and what the latest releases are? And I look around and I go, everyone's doing that. Like, I'm never gonna beat Hodinkee at releasing watch news. They're the best in the business at it. And then you've got a blog to watch, and you've got time and time. Like, there's 50 guys that are covering watch industry news, and what I don't think anyone's covering is the collector's perspective of it all. And so I'm not doing this to ever try and become a blogger and do this full time. It has just been, I spend so much time and mind share and unfortunately money on watches that I thought it would be interesting to start to write about them. And apparently it's resonating with the community. So I guess I'll keep doing it.
That's awesome. That's really good. Looking forward to seeing a lot more of your posts, because you're one of the most active watch guys on Instagram probably ever. So everyone should go check you out. I'll put that in the description as well. But I think more people
Awesome.
know about you than me, so I don't know if that means much. But thanks.
I'll take it. Appreciate it, man. Good talking to you.
And that's pretty much it. A major thanks to NYC Watch Guy for having this conversation. I think it was very useful, and his article is also very engaging. Once again, it's linked below. Do check it out. He's also got an additional article, Rules of Engagement, which is also in the links below. Do drop a comment. Tell us what you think. I'm curious to know how you found this discussion and how you find this topic. Thanks for watching. See you guys in the next video. Cheers.